First quarter, their margins expanded by around 280 basis points, while the revenue as well jumped by close to around 25%. Although the company did witness a dip in the paying subscriber additions. Mr. Dinesh Agarwal, the founder and CEO of the company, joins us on the show. Hi, Mr. Agarwal. Good to have you on the show. And, you're an outlier today because the markets are in the red and the stock, in fact, is trading well in the green. So clearly the street likes what you have announced in terms of your numbers. Give us some outlook from here on. Your margins have improved. By when do you get back to around that 30% odd in terms of margins by the end of this year? And also your subscriber addition, that's come in a little bit lower. I was going through your website and actually you've increased the pricing. Has that hurt this addition? Is that one of the reasons?
Thank you, Nigel. I think in terms of the margin question, I have been answering this, that we will try to see how from here on we can reach back to around 30%, maybe by the end of this year or so. And this quarter-on-quarter fluctuation is because of our business nature of business accounting, because the collections come in upfront, the revenues flows from back, while the cost also gets upfront. So in every quarter four, there is a higher cost. And that is why you see this margin fluctuation. But on an overall level, if you see year on year, I think we are better off than pre-COVID levels. And I think we will slowly try to improve from here. On the customers front, yes, we have taken a price increase. We were, before COVID, we were at 3,000 rupees a month. And during the COVID, we gave this support to 2,500 rupees a month, and we have again gone back to 3,000 rupees a month. And that has hurt the paying subscriber addition by about 2,000 for sure. We also had quarter one is generally slightly weaker. We also feel that there is some amount of churn which has increased, probably due to quarter one or probably due to base effect, because last year we have added a very good number of customers. So I think that is also picking up.
Okay, all right. So Mr. Agarwal, you're saying that this price increase that you have taken, that will hold out. But do you expect then the addition to go back towards that 6,000 to 8,000 that you have been doing?
Yeah, I think maybe just one quarter or so. I think we should look at 6,000, and then we will again try to go back to 7,000, 8,000.
Okay, so you'll go back to 7,000, 8,000. So one quarter of pain, and then perhaps 7,000, 8,000 on an average is what you'll see in terms of paying subscribers, right?
Yes.
Okay. Let's talk a little bit about what the average revenue per user was. In this quarter, what did you see as the ARPUs? And also, I think on an annual basis, you were looking at an increase of around 5 to 6% in your average revenue per user. Are you on track to do that, or do you think that could be a struggle?
Yeah, we are on track to do that. In fact, we are doing better. If you see, annualized ARPU in the last two quarters have grown by 7% and 8% Y on Y. Even sequentially, they have grown by 2%. So I think we are on track to do that 5 to 6% ARPU gain. Okay,
so 5 to 6% you're on track to do that. The collections have gone down on a quarter-on-quarter basis if you look at it in Q1. I think it's a 23% dip that you're seeing quarter-on-quarter. Can you explain the reason for that, and what would the collections look like on an average in the quarters to come?
No, so quarter four, as I said, is seasonally very high quarter. Okay. If you see year on year, the collections have grown by 25% or so. And so quarter four cannot be compared with quarter one. Quarter one is seasonally low and quarter four is seasonally very, very high.
All right, Mr. Agarwal, good to see. We have been chatting for the last many quarters, and I keep probing you what you're going to do with your cash. Now, you announced that buyback. It's a small one. But if you want to send out a better signal, maybe the promoter entity should not have participated. I think you're participating, right, in it?
Yes, it is a tender offer and everybody is participating.
But it would have been, I mean, from the investor community, it would be more heartening to see maybe the promoter entity not participate, but we take it that you're going to be participating in it. Any more M&A activity that we're looking at, since still you'll be sitting on a good amount of cash?
Yeah, so I think, three different possible uses of cash. One, obviously, for internal accrual purposes, internal safety purposes. Second is we continue to look for M&A opportunities. And if we find anything useful, we will definitely look at that. And third is returning cash to the shareholders, which we are trying to balance every year.
So M&A, you haven't identified anything for this calendar year yet?
Not yet. We have been trying to find something, but we haven't found anything.
Okay, got that. Would you like to end by telling us what you can guide for in FY24? Because in FY23, your performance was very good, a 30% growth on the top line. Is this something that you can replicate in FY24?
FY23 had a base effect of FY22 also, because the Q1 of FY22 was a little washout to second wave of the COVID. So I don't think we would see the 30% growth, but I think we will try it and maintain the growth that we have been able to do, about 24-25% this quarter. We'll try and maintain that.
You had made one acquisition, right? The Busy Infotech, I think so. Out there, I think margins have been a little bit lower because of higher employee cost. How do you see things shape up out there? Give us a broader guidance from there. How do you see this acquired entity ramping up from here on?
We are very happy with the Busy acquisition, the way it has turned out. I think my objective at the Busy is to grow the revenues and grow the subscriber base, make the software more cloud-based, cloud-friendly and mobile-friendly, move slowly and slowly from the one-time licensing fee to a subscription kind of a model. I think the first year has not come with any surprises, and we don't worry about margins there. I think we are investing behind the growth. The good part is that it is not consuming any cash and continues to grow healthy. This year we should see even better growth coming from Busy.
Okay, I think the street is also quite convinced of that. It's up. The stock is up almost 7.5%. So they definitely like what you're saying. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. By the way, just a couple of outliers since we're talking about IndiaMART, which is up 7%. You have many other stocks. Union Bank is up almost about 3% odd. We'll talk more about that with the management later on the show. So do stay tuned in for that.